Hey everyone, welcome back to Corporate Decoder. Today we are diving into a CuriosityStream filing, and trust me, it's more interesting than watching paint dry, especially since it involves a little oopsie that needed some clarifying. We are talking about CuriosityStream's latest report where they had to correct a previous statement. Let's get to it. This report is from March of 2025, and the event they are addressing happened just the day before, March 12th. Basically, there was a slip up during their earnings call, and they are setting the record straight. So here's the deal. During CuriosityStream's earnings call, someone mentioned that licensing revenue, that's money they get from letting other people use their content, was expected to be higher than direct revenue, the money folks paid to subscribe to CuriosityStream directly. That wasn't quite right. The company is saying, hold on, that's not what we meant. They clarified that actually, they anticipate their licensing revenue to be more than half of their direct subscription revenue in 2025. So licensing revenue will be significant, but it won't exceed what they make directly from subscribers. They needed to fix it quick. It aligns with what they said previously and their plans. Now, before we move on, there's this big chunk of text that's basically the company covering themselves, just saying that there are uncertainties in the future. They say, a lot of things could happen that make their actual results different from what they're predicting. You know, the usual "don't sue us if we are wrong" disclaimer. They are also saying that some of these risks are discussed in their annual report from 2023. These risks are important. They list a bunch of factors that could mess things up, like, if they can't keep their current partnerships or get more subscribers, new laws, problems with the internet, strong competition, lawsuits, and data breaches. Basically anything that could go wrong. Okay, so what's the story here? Well, it looks like CuriosityStream wants to be very clear about how they make money. It's a slip of the tongue that could confuse investors. They are trying to manage expectations and make sure everyone understands that subscriptions are still their main thing, but licensing is still significant. So what's our take on all this? Honestly, the fact that they had to issue this correction makes you wonder if there is some uncertainty about where their revenue is really coming from. Are they leaning too much on licensing deals? Are subscriptions not growing as fast as they hoped? It seems like they're trying to walk a tightrope, balancing the need to grow their subscriber base with the opportunity to make money through licensing. And that's not necessarily a bad thing. Diversifying revenue streams can be a smart move, but it has to be managed carefully. Overall, CuriosityStream is still an interesting company in the streaming space. They have a unique focus on factual content, which sets them apart from the Netflixes and Disneys of the world, but they are still a relatively small player, and they face a lot of competition. The risks they list in their report are real. The streaming market is getting crowded, and it's hard to keep subscribers happy. Data breaches are a constant threat, and new regulations could always throw a wrench in the works. In conclusion, CuriosityStream is a company with potential, but they have to execute their strategy flawlessly. They need to keep growing their subscriber base, manage their licensing deals wisely, and stay ahead of the competition, and most importantly, they need to make sure everyone is on the same page when they are talking about their revenue. Thanks for watching. If you enjoyed this deep dive into CuriosityStream's filing, be sure to like, comment, and subscribe for more corporate decoder action.